Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor. This is Dentist Money. Now, here's your host, Reese Harper.
Welcome to the Dentist Money Show, where we help dentists make smart financial decisions. I'm your host, Reese Harper, here with my trusty old co-host, Sir Ryan Isaac.
Good morning, Reese.
Overdressed and underpaid, Sir Ryan Isaac.
They've been calling me that since high school, basically.
No matter how much you get paid for the show, you always claim you're underpaid.
Yes, that's the way you get paid more. Just complain a lot. But good morning anyway.
Yeah, you're doing an excellent job.
Thank you.
I don't mean to be too critical of your wardrobe.
No.
I think sometimes I wish I wasn't wearing this formal nice shirt and I was wearing more of a casual, I just got out of the gym shirt.
Oh, yeah, I did get out of the gym. I wore this exact thing into the gym. I squatted in these loafers. This is a stretchy material pant, so you can get a full depth below parallel kind of squat. In your business casual clothing in the morning before work. Yeah.
No shower, just pop right in.
Yeah, no, I don't even sweat.
For those of you who don't know,
Pure sarcasm.
Ryan has a little bit better workout habit than most of us here in the office, so we're all trying to follow his example.
And by follow example, make fun of him.
Yeah, occasionally.
I like it. I appreciate it. Anyway.
Today's show has been one that goes back to your roots.
Yeah, my childhood.
I would say it's your birthright.
It seems like it. I have good memories from that
Ryan
time
grew
of my life.
up in the Northwest. Pretty much the only place that you can grow up in the Northwest, as they say.
Yeah.
The city of Seattle.
Yes.
Okay. Now,
Redmond, shout out.
People in Portland might say we're the Northwest too.
They are.
So Ryan grew up in Seattle, though. It does have a special place.
A piece of the childhood.
Yeah, a piece of his childhood was there. I'd say the most formative years.
Yeah, the ones that shaped me the most. That's so true.
Yeah, and he got to the point to where one day, Dad took him down to the
family outing, the Pike Place Market.
To the Pike Place Market.
Yeah.
Now, for anyone who has not been there, we're going to explain it a little bit. The Pike Place Market is on the Seattle waterfront. It's been there since the early 1900s.
Yeah.
1907, I think, was
over
the
100
first
years ago.
year.
Yeah.
It's world famous. There's over 10 million people a year that visit the market. But think about it, the entire population of the state of Washington is only 7.5 million.
Everyone's going 1.2 times.
Yeah, everyone is going there at least annually.
1.3, yeah.
And most people are probably just going there every couple of weeks that live in the city.
It's a really cool place.
Yeah. Ryan remembers getting donuts
That
there.
was my favorite memory, but I mean, besides clearly the fish throwing, which everyone talks about and remembers. I mean, I was a kid, but the donuts, they had these little, glazed donuts and yeah,
I've only been there a few times, and I don't remember the donuts.
It was probably smaller when I was there.
I got slapped in the face with a salmon flying by me.
A flying salmon?
Someone chucked a salmon in the air, and it was kind of flying through the air and whipped me in the face with its tail.
And then you punched it?
Knocked me out, and that's all I remember. After that, I don't remember anything.
Okay.
So it was kind of a crazy day. But we're trying to answer a question for those of you who have never been to the Pike Place Market. And I want to ask this question because it's one we got this week and it relates a lot to our discussion today. And we thought the Pike Place Market actually served as an excellent example to answer this tough question. The question we're going to ask today is if someone told you the Pike Place Market is expensive, would that, for those of you who live in Seattle, those of you who have been there before, and listeners listening to that description, Ryan, would that be a very good explanation of the Pike Place Market? Could I say the Pike Place Market is expensive? I mean, you've been there.
Yeah, no, it's not accurate.
And why would that not be an accurate statement?
Because what are you referring to?
You said your favorite thing was donuts.
Yeah.
I said I was hanging out by the Alaskan fresh caught wild salmon.
You were in the fish area.
Yeah.
The point is that it's too general. There's so many things that are sold and created and for all kinds of different prices. There's multiple sellers of the same item at different prices. So the point is saying that the market itself, the Pike Place Market, it costs too much money. The The real question is like, well, what part of it?
Yeah, are you talking about
donuts?
are you talking about coffee at Storyville?
Yeah, Storyville.
Crumpets at the Crumpet Shop?
Ye old. I wish that it was called Ye Old Crumpet Shop, and everything had an E at the end of it.
These are some famous things that are there that we've noticed. There's
Crumpet Shop.
beer in a cold mug at the Athenian, which is supposed to be really cheap.
Cheap beer.
Yeah, local honey from Bee Works.
Yep.
Gourmet chocolate from the chocolate market.
I feel like that's where you would be.
I would. It depends on what.
No, there's like a famous like indie chocolate place.
Nice
indie chocolate.
I love my Caputo's chocolate up the street from my house.
Yeah, some nice cacao. What percent of cacao are you?
100.
You're 100% guy.
Just kidding. That's not.
What?
Yeah, 100% cacao. That's me. You know, clearly,
It's like
you know,
chalk.
it's a little heavy, but you know,
Little heavy? Yeah.
there's some health benefits that I get from doing it that way. So, of course, there's blanket people, there's a gypsy that weaves
hand-woven
blankets.
gypsy blankets.
You've got all kinds of, of course, you got wild salmon and Alaskan halibut, king crab, lobster tails, black cod. You have Alaska weather vane scallops. You've got Chilean sea bass.
Mm-hmm.
Might be some an occasional. What did I see yesterday? The acclaimed Dorado fish. Like,
really?
It's from like someplace in South America.
The Dorado fish.
Yeah, it's like a golden Dorado.
It's edible.
People that are fishermen will know, and they will be like correcting me in their head right now. You can tell what we're getting at from this. If someone asks you, is the Pike Place market expensive, or if they say it's expensive, you're probably asking the wrong question. Because there's so many shops selling so many different products. Not all of them are likely to be expensive. It makes more sense to ask about specific items at specific shops, like
such as the cacao beans.
Yeah, like how
at
much
Indie
are
chocolate.
Yeah, or how much is the mac and cheese at Beecher's Handmade Cheese?
I think you would love that.
I would.
You
like
love
that.
a good mac and cheese.
Like how much is the wild Alaskan halibut?
Right.
And that'll have a market price.
Right.
And the reason we're talking about this is we commonly hear from dentists that the market is expensive. Or I'm just going to jump in the market when it's less expensive.
Yeah, I'm going to wait till it's a little bit
I'm going to
cheaper.
wait for the correction.
Yeah.
Or when that correction hit, like the market's so expensive right now, as you know, Ryan, I would never get into the market because it's so expensive.
Don't start sentences out with "as you know." It's like I don't.
At least
agree
to
with
Ryan.
You.
Don't tell
It's a
Ryan
pet peeve.
as you know.
Well, it's just like Sam. I'm gonna go shopping at Pike Place when it gets cheaper. You're like, well, which the blankets from the gypsy lady or the donuts or the fish? Which thing?
It's like telling an orthodontist, as you know, all brackets are the same. Doctor. Right?
Doc, as you clearly know,
it doesn't really matter which
bracket
system
matter.
you use, or
It's irrelevant.
the treatment plan for orthodontics really doesn't really matter.
Yeah.
It's all the same in the end.
As
okay?
you know, yeah.
Okay.
Just don't start.
So we hear that a lot with this market discussion, and I want to start by talking about the financial market is just like the Pike Place market in our example. We have all these people running around in the ocean, gathering up fish, okay?
Or boating.
They're
on
just
top
running.
Of it.
They're running around.
These crazy people running through the ocean.
They're running around the ocean and they're picking up stuff.
Yeah.
Some people pick up crabs, and some people pick up lobsters, and some people pick up.
Such a cool visual.
You know, some people are putting fish in a basket, and some people actually have a boat.
Yeah. Some in a pocket.
Some put it in their pocket. So think of all these people out there. They have all these assets that they've accumulated. They're carrying their fish around and all of their seafood. But they have to have a way to convert those assets into cash. And if they don't convert those assets into cash, they won't be able to go buy a house or go to the store and
grow a company.
They don't want to eat their dang seafood all the time. They want a burger. And so there's not a way for a guy to get a lobster tail converted into a burger without Pike Place.
Without the money.
So he needs the Pike Place market to convert his lobster tail into $1 that he can go and spend at his burger joint of choice.
Yeah.
And the financial markets work a lot the same way. Companies, like a small company in Japan, has built a manufacturing facility, and they've been making clothing and textiles for the last 20 years. And they're finally getting to the point to where there's not enough money for them to raise money from their local community and local banks. They need to grow and build a much larger facility and expand their plant.
Get some new equipment,
and
new
so
conveyor belts.
They decide to raise money through the public market, because if they just do it locally in Japan, they might have too many investors that they have to manage directly and talk to. But if they do it through the public market and they go through that process, then people like me and Ryan and the listeners, we can say, we'd like to invest some money into that manufacturing plant in Japan and be able to help them, because we really think that they're going to continue to grow. The economy is going to help them be able to be really competitive. And so that's a way that the owners of that textile business can get cash to be able to go and finally build their house they wanted to build, or finally build the manufacturing plant that they wanted to build, or
hire some more workers,
or buy the new land that they need. And without the ability to convert physical assets like your business equity, your plant and your facility and your products into cash, then people really can't live a life that they want to live. It's just uncomfortable, because you're accumulating all of these Alaskan halibut in your boat, and then you have to go and trade those fish for other things that you need. It's just really inefficient. And so the reason a financial market exists in the first place is you have just lots and lots of people that need to take assets that they have and convert them into cash. And that helps them grow. And it's a good thing for investors, and it's a good thing for these companies. So the types of things that you can liquidate in a market, there's a million different things in a market that you can turn from an asset into cash. Let's say, Ryan, you're living in Salt Lake City, where you and me live, and there's the city wants to put in a new railroad system across the entire state. And that it's a light rail system that gets rid of some cars and cleans up the environment and lets people travel, because we have this big old long strip of land across the mountain range and like one freeway. And if we don't have a public transit system, it's going to be a problem. So the state says, we're going to put in a train, right? Yep. And what happens in that situation so that the city can build the train and then somehow get money and make it all work? Like, how does that usually happen?
Yeah, normally it's they raise it through what's called a bond, and they get approval. That's when you'll see that during elections, where they're vote yes on this bond or vote no against this bond. A bond is just they're trying to raise money from the public, so they have terms of an agreement. The bond is going to cost $200 million, and it's going to be paid back over 7 years at 5%. And so they just go borrow money, and they get it approved through a voting process, and then they raise their money through the borrowing, and then they pay it back at a specified interest rate at a specified time, and it's all paid back.
And then sometimes instead of what'll happen is you'll see cities take that bond, and they'll open that up to investors to be able to put money into, right? That's done through what we call a public market. And those bonds end up being traded. After that initial bonding is done, what can happen is someone can say, you know what, I was okay initially for giving the city like $500,000 and I holding it for 10 years and getting paid 3.5%.
No, I don't want to.
But I don't want to do that anymore.
Yep.
I want someone else to do this. And so another investor will be able to buy that bond from someone else through the public market. That bond can then be distributed on a public market, and other people can buy or sell it, and continue to have the stream of cash flows that investment provides.
Well, think about how cool this is, though, to the scale of that. And you're talking about this earlier in your example from a manufacturing company in Japan. Someone wants to build a train system in Salt Lake City, Utah. I, as a local resident, can do that. But also, you might have people in Alabama or Florida, or New York City or California investing in, this train system in a state and a city they don't even live in. The market that they get exposed to, they can get money from, is really big. Yeah. It's really broad.
Well, and think about the manufacturing company in Japan that I talked about. The owner could he puts they take the company, it goes public, and they get money to expand their facilities, and he gets a little bit of money because he sold some of his stock into the public market and took some money off the table because he'd been working in that factory for 20 years. Well, he takes some of that money and he invests it in the Utah bond of the train system.
Yeah.
And he doesn't do it through a direct purchase. He does it through a mutual fund that ended up having ownership in that. And it's just crazy the scale of how how many different ways capital can be, assets, like things that people own, can be distributed across other investors. I mean, think about the alternative to this. The alternative would literally be the manufacturing company has to find like people that they can trade their ownership to in exchange for other ownership of other things that are not cash, right? So let's go back to the Pike Place market. I'm out on my boat. I have to find people to trade my fish to that have the right amount of burgers. Yeah. And I have to chop off the precise amount of Alaskan halibut that I would be willing to trade for a burger.
Yeah.
What
you're like
what
a
happens,
third of a halibut for a burger, a good burger. Then you got to go find but then you got to go find the potato person because you don't eat a burger without fries.
Yeah. What if you want a halibut burger? That gets confusing.
Q. You've always got good insight into this.
So smart.
Here, let me put a little wrench into this. In that transaction where I have the Alaskan halibut and I want to get a burger, and I'm trying to cut off the precise amount of fish, what'll happen is invariably, because no one else is telling me what my Alaskan halibut is worth, I don't really know what it's worth because I just got it out of the ocean and I know what it was a few days ago. Yeah. I chop off a certain amount of that fish, but it actually is a very inefficient transaction because I'm either going to pay too much fish for my burger or probably too little fish, right? What that's called in public markets is that's called a bid-ask spread. And in a bid-ask spread is something in a market where if you go to buy a stock on a market, there's a price you can buy it for and there's a price you can sell it for. And in many cases, let's say I own a share of that manufacturing company in Japan. It might, let's say it's trading for $10 a share today. You could probably buy it for $10 a share, and you could maybe sell it for $9.99 a share. Like the difference between what you can sell it for and what you can buy it for is really tight. Like it's what's called an efficient market, where there's so many people looking at the price of that thing every day that the spread between what it's worth is so tight that you're getting what we call a fair price or a market price.
That'd be the equivalent of you out on the sea with your lone halibut and the burger guy, and you're just trying to make an exchange versus you standing in front of like 1,000 burger guys, right? Who are saying, here's how much of that piece of the fish would be traded for the burger. Pricing it.
Well, it would be you standing in front of 1,000 burger guys, but it'd be 1,000 halibut guys standing in front of 1,000 burger guys.
Yeah, okay.
Going, how much, and everyone's just bidding on it and writing prices up on the board, and you get to look at the prices that other people are paying and saying, I'm going to offer a little less than that. I'm going to offer a little more than that. Yeah. And eventually, what happens to the price of the burger and the halibut? In that example,
and if it's 10,000 or if it's 1 million or it's 10 million people, then it.
Well, what naturally would happen to the price of the burger and the halibut in that scenario? Would it go up or down?
Down.
It would always go down. It will go down quickly to the point where it's what we call a fair price, unless there's not enough supply.
Yeah.
Like unless it's a better.
All of a sudden there's an announcement that there's no more halibut in the sea for the next 6 months.
Yeah, then the price of halibut would go up. But it would only go up to the fair price because the pressure of all of these buyers and sellers would force the price of that fish to sort of stay in lockstep with that's fair with the quantity.
Yeah.
Because no one's going, like everyone knows when things start getting really expensive. So here's just to give some people some feel good about the questions they've been feeling in the last few months. I know that a lot of people have probably said the market is expensive. And we've kind of walked through why that can be a dangerous thing to say. But the market may be expensive in certain segments. It may be. It's hard to say because there's 1,000 fish and burger guys bidding on it right now. And for whatever reason, those millions of people,
They've decided that's what it is.
they decide that Apple stock is worth that price today, given all the alternatives available in the entire world. All of the local real estate, all of the, local development projects, all the things that people could alternatively do with their money. There are a lot of very wealthy people that are determining that price is fair for that Apple stock. The United States market is different than Apple stock, and it might be precise to say Apple stock right now is the most expensive it's ever been, but it might not be fair to say Apple stock is expensive,
overpriced,
or it's overpriced.
Yeah, it's not worth that
Because these things are assets. They are real assets, like a house or any other real asset, like fish. Okay, those are real assets that you can trade and get cash for, and over time, all real assets inflate in value. They get to be worth more money. And businesses are just some of the most creative, organic, developing assets that you can buy. They're more creative, and they have the ability to create more value than land. They have the ability to create more value than a building, or more value than fish. Businesses
or a
can,
brick of gold, or
businesses can create. I mean, I don't really support this, but I'm just saying businesses can create genetic tissue to create fish in massive volumes, and so they're just more dynamic.
Take that, ocean.
They're just more dynamic than fish, and so. I'm a big organic food advocate. Okay, my wife is gonna kill me for saying
you're
that.
not gonna eat that, but they could.
I'm just saying businesses can do things that real assets cannot,
And they can adjust to conditions in the world and things that change.
and they are competitive, and they're thousands and thousands of people inside of a company fighting to make it be worth more money. So when people say the stock market over time has it's the highest appreciating asset of any asset, it's just because it's the most flexible thing that people can create and build. A company has the ability to use real assets and natural resources to create increasing value all the time. And where someone that's just trading land, there's a supply and demand for land, which means it'll always go up. But you can't turn land into like land is land, right?
Yeah, it does. That's what it does. Yeah.
It holds physical property.
Yeah.
But a business can be whatever you want it to be, and it can contain value.
And start making computers, and then make iPods, and then make phones, and then make cars,
or do dentistry, or provide a service. Right? It can do anything if people are willing to pay for that. If people are willing to pay for that business's good or a service, then it will increase in value indefinitely.
So I was going to say what I take from this too is I think there's a distinction. There is a real feeling that people have where you get to a point where you're like, that just doesn't feel worth my money anymore. Could be a car, could be a house, could be a steak dinner, could be a stock.
Yeah.
Like there is an emotional reaction to a price where you just go, it's not worth it for me to pay it. But you can't confuse that with it's overvalued. Technically, it's not worth that.
Yeah.
You have to separate what you're feeling, which is an emotional reaction to that seems expensive, I don't really want to pay for that, versus it's not worth it in the marketplace.
Yeah. Yeah. And
Those are two different things.
Think about, a lot of people probably struggle with this with their housing. Many of you probably, like if you're living in Northern California right now, and a lot of our listeners are, and you're trying to do new construction or TIs inside of like in the peninsula, and you're trying to figure out,
will you tell us what TIs are?
Okay, well, for those of you who do not know, which I think is probably very few of you, tenant improvement expenses,
Build outs.
But there's probably a few new dentists out there that probably haven't heard of that.
Fancy term.
I think thanks Q for keeping us in line
Yeah.
there when we start getting into the deep waters.
Yeah. All
So
high and mighty.
let's say you're going to remodel your office. It probably feels right now a little crazy to do that because it's like, oh my gosh, like I'm going to spend $350 a foot for
putting some walls and some carpet.
like that feels crazy to me. Like I don't.
Yeah.
It's expensive. We must be in a bubble. Like it's gonna pop. There is some limiting constraints based on where you live. There's just not any more room, and there's a lot of population demand, and maybe you are in a bubble. Like if interest rates popped right now and went up really high, the price of real estate in San Francisco would decline somewhat. If interest rates just took a huge move
Fast.
quickly, there's an argument for how prices could decline, because people wouldn't be able to borrow as much to buy or do their tenant improvement expenses. But you could also make the argument that they're worth what they cost right now, because there's just nowhere else to build.
Yeah.
People are going to continue to move there. There's more momentum in Northern California for population growth than maybe there's ever been. Technology and startup companies are going to continue to move there. Jobs are growing like crazy still. You may never see a point in time where it's like in 10 years from now, will real estate prices be higher in San Francisco than they are today? It's likely it's likely that
Right.
will be the case. And I think that's what we're saying about any asset. The financial markets are a place where all of these assets and all of these loans, you'll find things in you'll find real estate in financial markets. You'll find any kind of loan you ever wanted to think about doing in a financial market, any type of small business venture, any type of startup company, from software to services to manufacturing to industrials. You could invest in, clean energy. There's all kinds of different markets that they are not priced the same. They don't move in tandem. And I want to just give you some examples of this. If you look year to date so far, Monday, October 16th, these are the prices.
2017.
If you look in 2017, Monday, October 16th, these are the prices of different assets. I'm going to start with one of my favorites, the traditional
Yeah.
lean hog.
I knew you were going there. How's the lean hog performing? Now, this is a quarterly number.
Now, I grew up in Idaho right next to a very small lean hog farm.
Well, hold on. What's the difference between a lean hog and a normal hog?
What do you think?
I mean, it seems to indicate that it's a slightly smaller animal.
Yeah. It's just
it
lean.
does triathlons.
It's like concerned about its figure. Like, why would you want a
it's
lean
fairly
hog?
s-
Don't you want a big fatty pig? Is that
It's
what
fairly
you want?
subjective. Okay.
Like, if
What
I want
is
some
lean
bacon,
and-
man, I want some thick bacon. I want a lean bacon.
Okay. So hogs, I grew up by this pig.
Lean
Little-
hogs don't have any MSG, right?
Yeah. Just don't like
So-
the sound of that.
Or nitrates.
These little there's massive like agricultural farms of hogs and of cattle and any kind of animal you can think of. And in order for some of these farmers to be able to get liquidity, they have to sell the price of their meat or their vegetables or their grain or their potatoes. They have to sell them in advance of them going through a year. Because if you go through a year and you don't know what you're going to get for the crop at the end of the season,
Yeah, you can't
it
plan a
could
budget. Yeah.
put you out of business.
Yeah.
And so a lot of, in the financial markets, you'll find a lot of vehicles, they're called commodity futures contracts, where different farmers and different big agricultural operations that either manufacture meat or they manufacture vegetables, right? We'll call it that. They want to lock in the price of their,
You want to know what they're going to get paid?
they want to know what they're going to get paid at
Yeah.
the end of a year. And so people can,
It's their fee schedule.
yeah, those prices are quite volatile though. And investors can purchase or own those futures contracts. Now, for me, that's not really an asset. Okay. So I'm just trying to highlight in the financial markets, there's a lot of things you can do that are not assets. Okay.
Right.
So you can bet on the outcome of the Super Bowl, but that's not the same as
Owning.
taking a piece of Alaskan halibut into Pike's Place and converting it to cash.
Yeah.
Because you own something, you own a fish. In a futures contract or a commodities contract, you're speculating
You own a bet.
on the price of an item.
Yeah.
Now, the price of some items might show consistent price increases over time. Like some some wheat varieties might have more price increase consistency than others. But
Kansas wheat's
but
getting
you don't
killed right
own
now.
the wheat, okay? When you go onto your E-Trade account, all of you traders that listen to this, and you buy lean hogs, you don't actually own a pig.
To your dismay, you
Okay?
don't actually own the
You don't
pigs.
own
You
it.
can't cash them in for pigs.
Now, if you want to own
Be awesome.
a pig farm, you're gonna have to buy a stock that does raise lean hogs, okay? And that's the only way.
Or you have to go Warren Buffett style and show up to the actual farm
And buy that.
and offer some money
for a small stall.
for
You say,
the
I'll
stall.
buy this stall
Yeah.
from you.
And these 12
And
pigs.
so I want to make sure there's another thing in the financial markets called options, okay? And options are essentially the same thing as these farmers are making. They're trying to get a price locked in for the future so that they can protect their bet of raising the pigs.
Mm-hmm.
They raise the pigs and they want to get paid. An option in the market is when you as an investor say, I'm going to make a bet on the direction that I think this market's going to move. This stock, the direction the stock is going to move, or the direction that this overall market, like the direction that Japan's going to move. And I want to make a bet on that. I think it's going to go up or I think it's going to go down. So you buy an option to lock in a bet on the direction that you think a market is going to move.
Yep.
You don't actually own anything when you do that. It's the equivalent of making a bet on the winner of the USC University of Utah game last week. And so, Ryan,
Pain. You got to bring that up right now.
1 point.
You
I
gotta
was
bring that up.
disappointed, really sincerely
Jeez, man.
by that. Okay, I'm sorry. It was tough. And shout out to all of our Trojan listeners
Hey.
down there. Congratulations. It was a good game.
Yeah, it was awesome.
Sam Darnold's going to have to start tightening up his game, though. Right, Q?
Yeah, but he's got the size and the talent. He'll be fine.
Dude, 15 games in, and this guy looks like he's the real deal.
NFL scouts are drooling, man.
Totally, man. I was impressed. Anyway, congratulations, SC. You got an amazing quarterback for the next few years, assuming he doesn't leave.
Yeah.
So back to the market.
Back to options.
So I just want to make sure people realize not everything in a financial market should be invested in.
It's not not everything's an asset
Not
that has
everything-
an expected return.
Yeah, when we say like investing in financial markets, there is a right and wrong way to do it. I just think that the fact that people say the market is expensive really just shows the how big of a misunderstanding people have about what's in their own accounts, what they even own.
Uh-huh.
I bump into people all the time who all they own is like commodity futures positions in lean hogs and wheat and energy positions.
Yeah.
And they don't even realize they own no underlying asset.
Yeah.
Or they're owning currencies. They own currencies in Brazil. They own currencies in Australia. Those aren't assets, okay? Those are not.
They're bets.
They're
on
under
future prices.
They don't produce anything.
Mm-hmm.
They don't they aren't the same as a fisherman going out into the ocean and making something.
Walking around the ocean,
And
just grabbing
selling
himself
it. And companies,
Fatty.
if you invest in the broad equity market, a broad equity market or a broad bond market or a broad fixed income market, if you just add up all of the possible things that you could invest in, right, in the entire world, there's probably $40+ trillion worth of assets to invest in, like a financial value, of economic value that you can put your money into. And not everything moves the same. Let's go back to our quick example of the lean hogs are down year to date.
No, it's quarterly.
Actually, this quarter,
Yeah.
this quarter you could contrast two things. Greece is down 9% this quarter. Pakistan's down 12% this quarter. Kansas wheat's down 21%.
21% this quarter.
Corn's down 10%.
Letting you down.
Lean hogs are down 11%. Commodities in general this
Just for the
year,
year.
are negative 3%.
Yeah.
And if you look at some winners, you could say, well, emerging countries year to date, these are what we call the BRIC countries: Brazil, Russia, India, China. A lot of the smaller countries that don't have really big, we call it gross domestic product. They don't produce as much as like the United States or Europe does. Those countries, if you collectively group them together, are up 31%, as measured by this Morgan Stanley index that we use. 31% year to date for those markets. And the United States is up 13% year to date. So two very different parts of the world. One's up a lot and one's up just a little. So in this case, which one is expensive, Ryan? If you're a normal client and I say one's up 30%, 31% this year, and one's up 13%, which one would you say is expensive?
Well, the up 31%, the emerging markets, that's expensive. It's gone
You're
up
wrong. You're an idiot. You're wrong.
You fool.
Just kidding.
You fool.
But yeah, that's what I would guess.
That's the
right?
gut reaction. Yep.
So, but if you look at these indexes and say, well, what's the average return of these markets over a 50-year period, over a 30-year period?
Yeah.
Both of these markets have a similar annualized expected return. It gets close to around 10%. And so right now, though, if you look at the emerging countries and say, what is its current 10-year return? Like, where are those countries at on their 10-year return? You're going to see that those countries are, at this point, I don't think the emerging countries are even over 4% on the 10-year return back from today.
Yeah.
Where the United States 10-year return is getting closer to its 10% mark.
Yep.
It's probably in the high 7s, low 8s right now, depending on the index that you're using. So even though the U.S. is up 13% this year and emerging countries are up 31%, if you look at the last 10 years and say, where are these markets in terms of their average price? Well, the one that's up 31% is still really inexpensive relative to the U.S. But when people say I'm investing in the market, they're not thinking about
the different pieces,
these different
and how
pieces.
They work. Yep.
And these are massively different parts of the world with entirely different economic ecosystems, products, and company mixes, and
governments, tax structures, economies.
Yeah, and so when you're investing, and people will say, "Well, this year I'm just going to hold off." Well, by not investing this year, you're missing out on a massive growth opportunity that happened in emerging markets. And you missed it 3 years ago, not now when it's already there. You missed it. You missed the biggest bull run that emerging markets have had if you didn't have money in emerging markets for the last 4 years. Is there still momentum and room for upside? Yeah. Relative to the U.S. markets, there's still more room. All I'm trying to highlight, and this can get really complicated really quick, is that markets are not one thing. They're very diverse. There are a lot of things that are going down when other things are going up. And I think there's just a few important rules that people need to live by in this. And one of them is diversification. By giving you proper access to these thousands and thousands of different things at the same time using technology, there's really no investment quite like it in the world. I can't think of anything that really gives you the expected return with all of the benefits that come with a financial market. The Pike Place market is a small ecosystem example of what the financial markets are, but you can't, as a person in New York, I can't really access the Pike Place market and trade fish. It's just a local small ecosystem. It only holds. You got to be there. And it's a small market.
Buy your donut.
But the financial market basically takes things like Pike Place. If Pike Place were to be a part of a public company, which it might be, I actually don't know the ownership structure. I doubt it. But if Pike Place Market were a public company, it could we could then access it and provide it with capital. It just probably can't grow very much, so it wouldn't make sense for them to do that. It's probably owned by the city.
Yeah.
But that the public markets, the financial markets create this massive opportunity for liquidity, which is kind of that second benefit you and me talked about.
Yeah. Well, I was just going to back up too on the diversification. The opportunity to diversify. What happens when you diversify is you lower your risk. You lower your risk of concentrating in too much of one area.
Yeah.
And it is cool to think that I can participate in the upside of a company with 3 people in the middle of Australia that are just making their startup happen. I can also participate in the upside of the brainchild of Steve Jobs and the whole legacy that he's created and everything in between.
Yeah.
I can participate in building a bridge in New York or a railroad in Salt Lake City, and I could lend money to General Motors if I want to. You can participate in so many different things so easily at such a low cost, which we'll talk about, but that's what diversification brings. it spreads everything out so much, and it lowers your risk because of, you're just not concentrated in one thing.
Yeah, and I think it's funny though, like for something so powerful like a public market, that's what makes that is what has created wealth in our country. Not like it's what has raised the entire like average standard of living in this country is the robust financial markets that we have.
Mm-hmm.
And every country wants to have financial markets like we do because it creates all of this opportunity for businesses and governments, local and national, to be able to take public wealth, money that people have, and convert it into projects that they couldn't do otherwise.
Yeah.
You just couldn't, we couldn't have an infrastructure in our country like we have right now, as broken as it might seem. Our infrastructure for schools and roads and public transit and communications, they would not be able to exist at the scale they exist, and improvements couldn't happen at the pace they happen. And it really, I think a lot of people living here don't realize like how important a financial market has been to the overall stability and growth of our country.
Yeah, well, I was going to say, if you've ever visited a place that when you left, you were grateful for something as simple as like a sewage system.
Yeah.
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 I mean, it translates into a lot. You mentioned liquidity. The nature of these financial markets provides a piece of investment, like a characteristic of the investment that isn't found in a lot of other investments. Think about a building or land or the practice that you own, and that's liquidity. That's what you're talking about.
Yeah.
The ability to have expected returns as high as they are and have instant access to your money at any given point is it's a rare feature in investments. And that's usually what people will trade. When people are saying like, when they're talking about in pure returns, what kind of things have higher returns? Usually when things end up on the spectrum of higher returns, it's at the expense of liquidity.
Yeah.
You just can't get your money out of that thing. And that's the cost of why you might get a higher return.
In private markets, a dentist, in order for him to get capital into his business, if he wanted to open like 5 locations, he can do it on it with his own money, or he could sell some stock in his practice to an investor and put their money in. But do you think like, would you want the deal terms in that deal? Like, let's say you sold 20% of your practice in exchange for a couple $1 million because someone believed in your vision to expand into 10 operations or 10 locations. And you were going to go do this. Would you want the deal terms to be, if you give me the $2 million, you can get back any amount of money at any time,
Anytime.
any day, in any increment. Name your dollar amount, and I have an open checking account that will
Let's give it back.
Give back to you any amount of your stock that you bought at any point in time at the price that we agree on right now is always going to be fair, which is a 1 multiple of our collections or whatever. And you just got to talk to my assistant. You don't even have to talk to her. Just send her an email and she'll send you the money.
Yeah.
Actually, just push this button and I'll give you the money. It'll just pop into your account.
It's done.
Like, that's what a public market does. And companies, in order to be able to do that and give that kind of liquidity, I mean, the cost of it, it's kind of incredible that you're able to get an ROI on your money that's as high, arguably the highest ROI of any asset, any real asset in the world, with unlimited amounts of liquidity.
Mm-hmm.
And you don't have that in almost anything.
It's really
else.
rare. Yeah, it's really rare.
You get liquidity, and being diversified gives you broad access to so many different kinds of things.
It lowers your risk.
It lowers your risk a ton. It also saves you a ton of time. I mean, if you've ever invested in like a rental property like I have, you know how much work it can be. Even if you have a property manager, you still have like some pesky work to do quite often. You have to approve things and approve costs and put in new appliances and fix roofs, and like any kind of investment that gives you a higher return than normal involves some effort. And usually the way you make the money is you bought it on a song and a dance. It's not on the appreciation. That's what's crazy to me is you can say that like I can find a deal out there and I could buy a piece of property and I could grow my money faster than I could in a public market. That's totally true in some cases. But in order for that to be true, you have to find an entry price that is a song and a dance.
Yeah, below market. For some reason, you found it. You had some piece of information or something that allowed you to find it.
Or the timing was just really lucky, or maybe the city that you live in is just a depressed market. Like, and as a financial advisor, we've got to be open to that reality. Like, clients often send us projects that we look at and try to evaluate for them. In most cases, these are not good projects. In most cases.
It's not the song and a dance. It's a fair market price.
But in some cases, there's a song and a dance.
Yeah.
And it's a great deal. It's a great value. And so the value that you make in a private market is on finding a deal. And all I'm saying is that takes a lot of time. It takes a lot of expertise.
Exactly.
And it takes a lot of effort. And in most cases, you don't make more money doing it than you would in a public market. And the public market, if you take your money at any given point in time, cheap or expensive, and forecast that forward and say, what will my return be on this? The market will return to you historically a more compelling return than any asset that you could buy in the private market. And you didn't have to take any time to think about it.
Yeah, well, we've talked about this too. Well, we've had episodes on this. What is a dentist hour worth?
Yeah.
What is a good productive dentist time worth? And it's hard to make the argument for that trade-off to a lot of other things. A decade of school, hundreds of thousands, if not, millions of debt just to be in the position you're at, and the high dollar per hour of, that you're actually worth the debt. It's hard to know what the trade, where's that trade-off worth it?
You just don't have to feel like you're so locked into one item that you can't feel like a market portfolio, a financial market can. Here's what I'd just like to say as a closing statement around financial markets.
Closing statements, Your Honor.
Financial markets can give you liquidity, diversification. They can save you time, and you don't have to feel like you're locked into one thing. It's not, quote unquote, the market. I have plenty of clients whose primary risk objective is I want to make, the highest percentage return I can. And I have other people who are like, I don't want any volatility.
Right.
I just want 3 or 4% a year. I just never want to lose any money.
Don't worry about it.
And I don't want to think about this. I just want to have a stress-free life because I can save tons of money and I'm going to retire by earlier than I ever thought possible. I just don't want to lose any money. I don't want to stress it. When the market's going, when stocks like Apple are just going down like crazy during 2007, 2009, I don't want to do that. Like I don't want to go through that. I just want my nice kind of ride.
Yep.
And so I think that the important thing to remember for people is financial markets give you this diversification and time savings. They're very low barriers to entry, like we talked about with, you can't shave off just a teeny little bit of fish and trade it. It's hard to save off a teeny bit of your dental practice and just sell off a teeny bit of it. Or your house. I just want a teeny bit of my house back.
Just get rid of
you got to go down to the bank, you got to get a line of credit. You've got to do a refinance. If you want $100,000, maybe you can't get it because it's like your property doesn't appraise properly. In a public market, it's like, sure, anytime you want your money, you can borrow against your money just like you would a line of credit, or you can just have it back in cash. It's just so liquid. And the barrier to entry is so low, you can put $1,000 in an investment.
And you don't have to be an expert. You can hire experts for really inexpensive.
Yeah, it is inexpensive to outsource that type of work.
Outsourcing's cheap.
It's pretty expensive to try to go have someone try to find like great private market deals, like buying a business for you or, buying a restaurant for you, buying real estate for you. It's pretty expensive to get in and out of real estate. Like that, most of us are going to pay like 6%. On transactions.
You have to pay a lot for someone's expertise to know how to go find that song and a dance, like you said.
Yeah, and it's worth it for in the right situation. It's just to assume that you're. I just don't want people to feel like the market is one thing because portfolios are custom to your preferences for what you want to invest in. You just have to have enough knowledge about what you own to know that you're owning something you can have confidence in. And that's what I worry about with most people is they just don't know what they own and they don't have confidence in what they own. And that's what makes them not like the public market. Because it's like, it'd be like investing in Pike Place and only knowing the name of it. But you really don't know if it sells fish or what kind of fish or what you're paying for them.
You had no idea that they sell donuts and gypsy blankets.
So like you just live in Seattle and everyone talks about it and you put money in this bucket and it says you get Pike Place though. You just get it. And I think that's how most people feel. It's like they're blindly investing in this black box that everyone says you should invest in, and the government set up retirement accounts that give me tax advantages. So, okay, I'll do it.
Yeah.
Obligatorily, I'll put some money in there because I get a tax deduction.
Yep.
But it's just not as bleak and as bad as people feel.
It's more diverse. It's less expensive.
It's more like
liquid.
a fish market
It's
than
a higher
you
return.
ever thought.
Yeah.
It's a lot more like Pike Place than you ever realized. You just need to know that that's how it's functioning.
Yep.
And I think it gives people more confidence to know that a fish market in Seattle is a lot like a financial market.
All right. Well, thanks everyone for listening. Thanks, Q.
Thank you,
Big Hoss,
Ryan.
for being here.
Thank
So
you.
Another great day
Best
in the studio.
co-host in the world.
Yeah, in the whole wide world. Our podcast is now on YouTube. You can find it on the Dennis Money Show on YouTube. Hit the subscribe button. Again, we're excited to announce that we are the official podcast of the Greater New York Dental Meeting. That's coming up this November 26th through the 29th, just after Thanksgiving. We would love to see you there if you're in the area. You can get registration details at gnydm.com. And we'll put the link in the show notes for this episode as well. When you go to our website at dentistadvisors.com, you can click a link at the top and schedule a free consultation. You'll pick a time that works best for you, and then we can talk about your specific situation and how we can help you make work optional at an earlier age. Or you can just pick up the phone and call us anytime you want, 833-DDS-PLAN. Everyone have a great day.
Carry on.